Good afternoon, everyone, and welcome to our regular Thursday afternoon Innovative Business Advisors webinar. I'm going to give you a little bit of information up front and let you know that we expect the webinar to be shorter today than normal. We expect that we will probably last through about 30 minutes. But of course, depending on your questions and any information that you ask us for, we will go ahead and continue until we've answered all your questions. And I see a couple questions coming in already, so I'll hold those until a little later. I'll repeat for everyone, we're in the Zoom portal. You'll see at either the bottom or the top of your screen, depending on how your computer presents Zoom, a series of portal or Zoom buttons that you can use to communicate with us. We ask that you use the Q&A tab to type in questions if you have questions throughout the webinar. And we will try to answer the questions during the webinar. We've been able to do that pretty well over the course of the last several weeks. So pay attention and put your questions in there. Put your questions in early because, as I said, we expect to finish in about 30 minutes today, which is half the time that we normally run this webinar. Steve will be offering us, Steve Denny will be offering overview, an update, and he will answer any questions that you have live. Yes, Steve will be answering questions live today. And after the webinar, as always, we are recording. We will post the recording to our YouTube channel, along with any documents or decks, the PowerPoint deck that we referenced during this webinar. So with that said, I've kind of and hemmed and hawed. If I were in, have you ever done Dale Carnegie, Steve, where they count your uhs? I think they would have kicked me out of the meeting. Or no, Toastmasters. It's Toastmasters Toastmasters where they count your uhs. So they probably would have kicked me out of the meeting on that introduction. But with that said, Steve, it's yours.
Thank you, Marquita. And as always, thanks so much for giving us your Thursday afternoon here. Well, folks, going to look a little bit similar to what you saw last week. I just sit here thinking every week, here we go again, right? The changes continue. So I'm just going to touch on the SBA loan program again. We continue to get questions in that area. And then we did get a big document dump from the SBA this week. So we're going to talk about the changes there. Also going to talk about Shuttered Venue Operators Grant again, and then as always, we'll be available to take any of your questions. So don't be shy. I also want to emphasize that everything that you're going to see in terms of the slide deck, we'll load that up. Terry from our office also includes a link to a file folder where you will have this week the full text of the interim final rule that the SBA issued. You will have all the new forms. You will have a new FAQ document, all the information we got from the SBA this week, and it's a lot of stuff. So you can count on us to be able to deliver it to you there. You can go to the SBA website, but you have to hunt and peck around a little bit to get the various documents. We've got it all in one place for you. So just to talk first off about the PPP, excuse me, not the PPP, the SBA loan programs, I want to call out again, these are the various underserved industrial sectors that have been called out in the law. So special provisions for loans for businesses in these sectors. And if you happen to be in one of those sectors, it is, boy, now is certainly the first time in my lifetime, and maybe in yours as well, where there are some incredible incentives for you if you need capital in your business, and the SBA loan programs are there for you. So just wanted to flash this up. They're talking about if the money runs out, reducing the 5 free months of payments down to 3. That's a big if. As everybody is probably aware, there's a very large $2 trillion bill on Congress's desks up in Washington, D.C. right now. I don't know whether or not it includes additional monies for these things. but it would be a safe bet that that it probably does, because there's a lot of questions and feedback going on about that. The other thing is the additional terms under SBA lending right now. Everything's at a 90% guarantee. Absolutely amazing. Met with 2 bankers this week, and one of them is a bank president, does a lot of SBA lending, and he was telling me in his lifetime he doesn't recall anything like this as well. So pretty awesome incentives out there for folks to, particularly for business owners, to help kickstart the economy and get us back to where we were. And then also just a quick note to say that, you know, all of these programs are in effect tax neutral as it relates to the free payments that they're providing and so forth, and you will not be receiving 1099s for those. So it's a great opportunity to take advantage of that. Okay, let's move right into more of the PPP stuff. So the SBA did also provide an update. So this is as of the end of last week, PPP lending. As you can see, it ticked up. We're now over 156 billion, and total dollars 678. So it does continue to grow. Quick reminder: the PPP program is due to end for first and second borrowers on March 31st of 2021. So we are literally 27 days away from the potential end of this program if the funds hold out. And that's the big question, if the funds hold out. And then the loan breakdown for the 2021 PPP, you can see that. And a lot of the emphasis that the current administration is putting on is for low income borrowers and the smallest of small businesses, and it certainly seems to be paying off. So the numbers are growing in those areas. So you can refer to these this deck. We will also include, the SBA's got a larger deck. I've just pulled a couple of slides out of it. They've got a much larger slide deck that's got a pretty comprehensive summary of the activities so far. We'll put that whole deck into the download portal. So if you go to our YouTube channel, go to the COVID-19 playlist, you'll see this video will pop up as the most recent addition to the stack. And in the description for that replay will be the link to the file folder that has all of the attachments I'm referencing. So should be an easy one click for you in that regard. All right, so we had given you guys a preview last week that we got notification from the SBA earlier in the week that there were several significant changes that were coming up. And they had given us an overview of those changes. We shared those with you. They did publish what's known as their CFR. I'm sorry, it's actually an interim final rule, but this is the document type. And in typical bureaucratic fashion, the first thing we see is we have 6 new forms, right? I feel like Steve Martin. Remember Steve Martin and the Jerk running up and down the street screaming, the new phone book's out, the new phone book's out. I think there are people in Washington saying, the new forms are out, the new forms are out. Here we go. So 6 new forms for the PPP program. Man, if you've got your scorecard out, just cross off all those old ones, because this now takes precedence, and I'll cover you through them real quickly. The first one is a PPP first draw borrower application form. So if you have not yet made your application, you will now be utilizing a new application form. We'll show you what that looks like in a few minutes and cover some of the details of that. That is form number 2483. There are significant changes and a couple of really impactful changes for Schedule C filers. These are small businesses, sole proprietors, independent contractors, businesses where they have no employees, where the owner may be the only person in the business. Typically, those sole proprietors will file a Schedule C. And there is now a new form specifically for Schedule C filers, and we'll talk about that in detail. As you can imagine, since we've got 2 new forms for the first draw, we got to have 2 new forms for the second draw borrowers as well. So We do have a second draw borrower application form, and if you file your business taxes under a Schedule C, then there is the new second draw borrower application for Schedule C filers as well. In addition to the borrowers, now the lenders also have new application forms that they have to use. The difference for the lenders is basically it's a portal issue for them. They don't have to print and fill in forms like us borrowers do, but they've got to provide a bunch of information into the portal, a bunch more information than was asked for in the past. So if you're a if they're a first draw lender, they've got one application. If they're second draw lenders, they've got a separate application. And again, it seems like Washington, D.C. is fueled by forms. And so now we've got 6 new ones to add to the stack. At some point, Marquita, we should sit down and just count all the forms that have been created from this program, because I know it's been a significant amount.
Well, you bet it has been. And the thing that could be confusing is, at what point in time did you make your application? Yep. So, just as we have these new first draw forms in 2 categories, we've got the old, the old first draw form from back in the spring. So that's all interesting. So Steve, are you going to talk a little bit about the application for forgiveness next? Because I've got a question on forgiveness, and I want you to finish your presentation before I jump into that.
Okay, let me talk a little bit about clarify some of the points we made last week and the 4 new provisions, and then we'll dive into forgiveness. But the point I was going to make is a great segue, Marquita, because I was going to say, as you may imagine, now that we have all these new application forms, I can just see that it won't be long and we're going to have a whole new set of forgiveness application forms as well. So just know those are coming down the pipe. So every week we think this could be the last week for us, Marquita, and this is the gift that just keeps on giving to our workload.
Yeah, well, you let process people get a hold of it. They're going to come up with a better and better way every week. And I am one of them. I have to, confess.
Yeah.
I get it.
I'm going to go back to first off, I want to say, again, we wrote a blog post that's gotten pretty good traction on our site that said, hats off to our national leaders. They did an amazing job in terms of creating some of these programs, and I continue to just have nothing but praise and worship for the folks in the SBA. The work that those folks have done with the changes in the law and all the activity and all the changes, just been absolutely phenomenal. The amount of change that organization has had to endure is just mind-boggling. Yeah. So somebody's going to write some interesting books about this in the future, and it probably won't be us, but it might be interesting reading.
Agreed. Agreed.
So let's talk about, first and foremost, there are some significant changes that we had some guidance on last week and provided our audience with some information, and now we've got some additional information. We had talked to you guys about an exclusivity period for applicants. That is all standing as is, no real changes. A couple of key significant changes, though, we had also talked about. They were making the rule changes for Schedule C filers. Now you can see there are all new applications for Schedule C filers. And keep in mind that Schedule C filers are the smallest of small business, if you will. So this administration is intent on making sure that the underserved and the smallest of small business get the lifeline that's available to larger businesses, and you got to say that's an incredibly noble effort in that regard. And they're backing it up with quality action. The one complication is now you are going to have to present a copy of your Schedule C with your application. So, remember, we started with a really simple application process. Put in your contact information, answer 3 questions, check the certification boxes, and sign it, and you're done. Now the application has become multiple pages again, and you've got to provide attachments with your application for the first time ever. This is significant. But on the good side, there's I would say that is going to slow down some applicants. Marquita, we well know, working with small businesses, that not having all their paperwork readily at hand is often a challenge. So I can see that will probably slow down the application process, as now.
Well, you know, Steve, I would go a step further and say it should not slow the process down, because they should have their Schedule C readily available. I mean, we're what, 6 weeks from filing income tax? You ought to have that 2020 doc in hand right now, and certainly the 2019 you already had. It shouldn't be that difficult to pull it to pull that doc together. If you could calculate a 25% reduction in revenue, you've got to have that you've got to be ready to produce that doc. Would you agree?
I agree with you, but I'm just saying, we live the practical reality every day.
You didn't have to print it out. It was
people.
kind of like out there in the air before,
Yep.
but now you've got to print it out and show evidence. Yeah.
Well, people get it from their accountant, they glance
Yeah.
at it, and they put it in the file someplace,
Yeah.
right? And then they
Yeah.
gotta go. Then now they gotta
Go
go pull it
find
out
it.
and make
Yeah.
copies and go get it.
Yeah.
So yeah, I agree. It should be available. The really good side of this is they now have a revised formula. We previewed it last week. So in the past, what you did if you were a sole proprietor, independent contractor, or a 1099 worker, right? You filing under a Schedule C, and obviously in those situations you would have 0 employees. What you did in the past is you would go down to the bottom of your Schedule C and you would calculate the amount of loan availability based on your net profits. Now what they've done is they have created a formula whereby you can use the gross income, which is line 7. So a Schedule C filer has the option of using either their gross profit line or their gross income line, one of those two, whichever is more advantageous to the filer. So that's a significant help, and that should be really really good. They've complicated it a little bit if you're a sole proprietor that uses a Schedule C and you have employees in your company. So you have the same 2 options, the same option of using either net profits or gross income, but there are some additional formulas where you've got to bring in additional line items. And we've highlighted that in the FAQ documents that are attached here. So rather than take the time and walk you through those complete formulas, we're just going to attach them in here, and we'll be happy to answer any questions in upcoming webinars for folks that have got questions about that. It's actually pretty straightforward, but and the instructions do tell you exactly what line items from your form to pull in and how to calculate the funds that are available, if you will. And that is how you determine the amount of the PPP loan that you're eligible for. So the key thing, though, they came out and said, because keep in mind, this should be a significant enhancement. So you ought to be able to potentially, as a borrower, get a significantly different amount of money based on these calculations. So if you already are approved for a PPP loan, though, you cannot go back and recalculate under these new terms. So that is, that's in the fine print of these things, but people will probably be a little bit disappointed about that if they already have an application in place. But if you, again, keep in mind, approved is the key word there. And then there is some additional $1 billion in terms of set-asides for companies that specifically have no employees. So we had a good amount of intelligence on that last week, and that holds. So just quick review: Schedule C, gross income is the total of the top lines on your return. Gross income could be a significantly different number than net profits on the bottom of Schedule C. So it should incur to the benefit of the small business owner in that regard. The next big change, the elimination of the fraud restrictions. So this is specifically called out for non-fraud felony convictions, and it is applicable to owners of the business. So in the past, if you had any type of felony conviction, regardless of type, any type of felony conviction, you were not eligible for an SBA program loan of any type. Now what they've done is they've said, if you have a non-fraud felony conviction, meaning that you have not been found guilty for lying on an application, for fraudulently submitting tax returns, or embezzlement or any other type of financial fraud, then in those situations they are saying those people that may have a felony conviction for a non-financial fraud are now eligible for a PPP loan program. So that's a big change, and they're only looking back 5 years in that regard. So if it goes back farther than that, could be a question, and we'll see some of that on the application. The next big thing is student loan delinquency. Now, there's an interesting wrinkle here. So we had a preview of this last week as well, and we talked about if you have a student loan delinquency, either a full default or if you're just delinquent meaning you're behind on payments. Full default means that you've quit making payments and they've basically determined the loan is due and payable in full, and you are in full default. Both of those situations do not count against you as it relates to the PPP. So if you own 20% or more of the business and you have a student loan delinquency or default on your record, up until this change, you were prohibited from being able to take advantage of the PPP program. Now they have changed that and said that you are eligible to participate in the PPP program. They've gone further on this provision and said that it applies retroactively now. So if you applied before and were not approved, right? If you were denied a PPP loan, you can go back and reapply, and you will be, if this was the reason why you were denied, you will be approved. However, the one little wrinkle to this is if you have any other SBA delinquency or default, or any other federal agency delinquency or default, then those are still prohibited. The only thing they're accepting here is student loans. And one area that I didn't put in the notes, but you will read in the interim final rule, is they've said that because of the fact that in the original CARES Act, they started automatically deferring student loans. And there is a feeling among the administrators of the SBA and Treasury that there are people that may have erroneously certified on their application that they were not in default or in delinquency when they actually may have been, because they had received some notification and knew that the CARES Act suspended student loans. So in those situations, even those that may have made the wrong representation on their applications, they are deeming all of those forgiven. So I think we can guess that this goes to the heart of the administration's promise to, do some action on student loans. This is one way that they have been able to go out and set aside folks that are struggling with student loans. I also want to give you a little interesting sidebar here. For some reason, I took an opportunity to go take a look at the U.S. debt clock. So if you go to debtclock.org, absolutely fascinating. And what it shows you is the amount of our U.S. debt and the size of our full economy in real dynamic terms. And it shows you all student loan debt in the country versus other types of debt. And I was astounded to see that there is twice as much student loan debt in the country as all the credit card debt combined. So it's fascinating. And if you're not aware of how far our country is in debt and how much of that is held by foreigners and so forth, take a couple of minutes and go to debtclock.org. And I think you'll be surprised at the numbers in that regard. But a nice way to help people that may be struggling, particularly those that have student loan debt and have elected to open a business of their own. They were in the past, they were locked out. Now they can participate and get some relief for their business as well. And then finally, we talked about non-citizen owners. If you're a lawful U.S. resident and you have an ITIN number, individual taxpayer number, then you are now eligible for these programs as well. So big changes in that regard. And we talked about last week the updated demographic information that's there. I wanted to pull up the application. I'll just show you what the borrower application looks like. It's just gotten bigger. You got to check in more boxes here. The demographic information here on the bottom is what we had talked about just a second ago. And then these are the qualifying questions. And this is all based on the revised March 3rd application form, which should be used from March 3rd forward. So this is the actual certifications that you got to make in these areas. So with that, Marquita, thanks for giving me a little grace. What's the question you have on PPP forgiveness?
Okay, on PPP forgiveness, Fred asked the question, and he's essentially, it's pretty long, but the gist of it is that he's wanting to understand why some of the bigger banks are having more difficulty and are still waiting to open their forgiveness application portals, while some of the smaller banks have moved forward with accepting the forgiveness loans. And I certainly know the answer to that. I can tell you some examples. So Steve, if you want to take a shot first, I'll join in, or we can chat about it together.
Yeah, I think it's just unquestionably the fact that bigger banks, you know, view risk management in a different lens than the smaller banks do. The smaller banks have a closer relationship with their customers. The smaller banks took at face value the fact that the federal government was going to fully indemnify them, and they moved very quickly to act on these things. The bigger banks felt that they had to run it through a process of their own, and that definitely slowed them down. And there were a lot of people that have been penalized and suffered through this. Many of our clients have experienced that.
Absolutely. You know. And what I will share with you is there's another technical aspect to it too that I've seen as a theme as I've worked with clients through this process, and that is the SBA has given us forms. So we know that the SBA has provided to the banks who actually receive your forgiveness application some standard forms for SBA, and they have to input the data into the SBA system once they approve your forgiveness, once the bank approves your forgiveness application. Well, I'll tell you what I've seen already is that I've seen very, very small banks use the SBA forms and distribute those to their clients and say, complete this form, and then you have submit that. So there's no new work to be done. They're just passing through the SBA app. I saw a moderate size, I would say medium size regional bank who engaged a portal that is powered by SageWorks. And they have gotten that portal up and working very well, and they're processing well on their forgiveness apps. And I know one very big bank that I am very close and dear to my heart, who is still struggling with it because they developed their own portal. So there's a technical dimension to that too, is, you know, if in fact you're doing more manual processing and you're using the forms as sent by SBA and using those paper forms to enter into the SBA portal, those banks have turned on a dime. The ones who actually built a more sophisticated system on the back end are some of the ones who are still waiting. So I hope, Fred, that answers your question. So there are two aspects to it. It's philosophy on your risk as a bank relative to the decision, the underwriting decision to approve forgiveness. And the second piece, it's just technical. It's a philosophy around you know, how you deliver that application process to your clients, and do you just simply do it manually, or are you you know, building a system, so to speak, in the background to feed that into the SBA?
Yeah, and some banks have done a really, really good job at this, and some banks have really struggled. It does seem to us, from our vantage point, that what we've seen is the bigger banks, while they've done significantly more loan volume than the smaller banks, their customer service and their responsiveness has certainly suffered. And I know that there are people that have had good experiences with them, that the technology happened to work for them the day they showed up to use it. And we also have clients that have had one frustration after another with some of these big banks. So we've heard both ends of the spectrum.
Okay, and Fred said, thanks, we answered his question. So as we sit now, Steve, we have no open questions. Well, let me go back. You answered, and I want to make sure the other people are aware of this. You answered a question on behalf of Steve earlier, who wanted to know how he could invite friends to this webinar. And you shared that information in the chat box. So hopefully everyone out there can see Steve's response in the chat box, and it has a link to our registration portal for this webinar. And once you register, you're registered forever. And I think we have about a 12-month rolling schedule for these webinars. So go ahead and look in the Q&A box. It's not the chat box. It's in the Q&A box. The link is there. And we do mail this link out too via email repetitively every week.
Yes, so you get an email reminder of it ahead of the webinar, just to let you know that it's there. We haven't put it in the comments of the replay. We should probably do that. I'll talk to Terry about that as well.
Okay.
All right. So let me transition. So hopefully, significant changes to the PPP. Again, the SBA has done a really nice job of producing a frequently asked questions document. I actually have it here. It is 30 pages long. It will be included in the attachment. It answers a lot of specific questions, and it has some good examples in there. We will have all of the application forms up there, and we'll have the SBA's presentation deck on their overview of the program as well. So lots of information will be available on the replay. Let me touch on the Shuttered Venue Operators Grant, and we've got a couple of clients in particular that are anxiously awaiting this program. We keep saying every week, it's coming, it's coming, it's coming. Well, as of this week, it's still coming. So just do a quick overview of the program, because there are a couple of key things you need to know. You had to be in operation February 29th. You cannot apply and receive a PPP after December 27th if you are interested in receiving the Shuttered Venue Operators Grant. Now, why would you want the Operators Grant? Well, because first off, it's a grant. There is no forgiveness process. You are given a grant with no tail attached to it. So you don't ever have to file for forgiveness of that. And the grant is equivalent to 45% of your gross revenues for 2019. So it can be a significant amount of money. If you're a large movie theater doing $5 or $6 million a year, that grant could be a pretty significant amount of money to you. So from that perspective, having no strings attached to it, no repayment responsibilities whatsoever, no forgiveness filing responsibilities, and it being pretty significant in size, I think it's going to be a pretty attractive program that'll get a lot of attention once it gets open. Documentation is, you got to be able to measure the difference between 2019 and 2020. And you're going to have lots of information to submit as part of that application regarding your employees and various aspects of your actual business. So these are still a little bit nebulous. I'm giving you not quite as much elaboration as available on the SBA website, but kind of an overview here. But we're expecting that there will be quite a lot of elaboration in those areas. The key thing is, in order to make application for this grant, you are going to have your business entity registered in the SAM system. And in order to register in the SAM system, you must have a Dun & Bradstreet number for your business. So we checked with our couple of clients, and we had to get one issued, and the other one we had to go find on behalf of the client, but we found their DUNS number for them, and then walk them through the process. There's no cost to register in the SAM system, but it takes some time. You got to go in and put all your business specifics in there and get registered. And we don't know exactly how that will be integrated with the application process, but it definitely will be. So at some point in time, know that that's the way that's going to come down. Finally, I just want to point out that on the SBA's website, they've got this neat little matrix that's pretty simple and just shows you exactly what is available to you these days as a business owner and what you can and can't do in regards to the various programs that are available. So nice little graph. And Marquita, with that, I'm at the end of my talk.
Well, Steve, you kept your word. We're right at 36 minutes now. We maybe started 2 minutes late, and so we're right on the 30-minute boundary. I don't have any additional open questions, so let's go ahead and wrap up. Simply want to remind everyone that we do this every week. It's normally a full 55-minute webinar, and we will be here again next Thursday at 3 o'clock Central Time. And as I said earlier, share our link to register for this with people that you know. We welcome others to come on board. We do know also that many people will come back over the weekend and actually watch the recordings over the weekend. So feel free to share the link. They can join us live, because that allows you to get your questions in. However, if you're unable to join us live, come back and pick up the shared link to our YouTube channel. And as a matter of fact, I'll just repeat again, our YouTube channel has a recording of every webinar we've done since last March. I think we started the last week of March when we all walked out of our offices thinking we were coming back in 6 weeks, and here we are, you know, almost a full year later, and still dealing with this. So you can go out to our website and see prior webinars also. So all of that information is out there. With that, Steve, you get the very last word, and we'll shut down for the day in record time.
Yeah, record time this time. Well, again, our commitment is to keep the audience informed, and we're appreciative of you sharing it with your friends and people within your circle. If you find it valuable, obviously we're not charging for this. We're just passing along information that we've got available to us as folks that regularly participate in the various SBA programs. There's a lot of good here, and I know that there are a lot of business owners that are somewhat reluctant to go to the government and get a little assistance, but there's a lot of good in these programs, and we strongly encourage you to take advantage of them. And if Marquita or myself or any of the other members of our team can be of assistance to you, please reach out to us on any of the resources that you see on the screen in front of you. All of our contact information is available on our website, and you can learn more about our coaching products and some of the periodicals and books that we've written in the youdon'tknow.com chapter. So thank you very much for devoting some time to listening to us today, provide this information. And again, if there is anything we can do to help you in your business, don't hesitate to reach out. We would be honored to be of assistance. And with that, go out and make it a great day, and we will look forward to seeing you next week. Take care,
Bye,
Marquita.
everyone.